Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao.
The EURUSD pair traded in a consolidation mode on Friday, May 22, and resumed its upward movement overnight into Monday after rebounding from the 61 Fibonacci retracement at 1578 and consolidating above 50% retracement level at 1.1630. Therefore, the euro may continue rising toward the next Fibonacci level at 38%, 1.1682. A consolidation below 1630 would favor the US dollar and signal a resumption of the decline toward the 61% Fibonacci level at 1.1578. The wave structure on the hourly chart currently remains relatively straightforward. The latest completed upward wave exceeded the previous peg by only a few points, while the latest downward wave, which has not yet been completed, broke below the previous low. Thus, the trend has shifted to bearish. The temporary ceasefire between Iran and the United States supported bulls, but for an entire month. But this was followed by a period of fighting hopes for a lasting peace agreement. Bulls will only be able to launch a sustained advance if Iran and the United States sign an interim agreement. On the 4-hour chart, the pair rebounded from the 76% Fibonacci retracement level at 1617, but failed to either continue upward movement or begin a decline. Therefore, geopolitical developments continue to shift the direction of the pair on the daily basis, and at this stage, we recommend focusing primarily on the hourly chart for analysis. No emergent divergences are currently observed on any indicator.
And we're starting with pound sterling dollar pair with Din Lao.
On the hourly chart, the GBPUSD pair continued its upward movement on May 22 and managed to consolidate above the resistance level of 34.54, 34.66 on Monday morning. Therefore, the pound may continue rising at the beginning of the week toward the next resistance level at 35.26, 35.39. A close below the 34.54, 34.66 level would bring bears back into the market, allowing them to target the 1.3408 level and the support at 1.3349 and 33.55. The wave structure remains bearish, as bulls still lack sufficiently positive geopolitical developments for a full-scale advantage. The last completed downward wave broke below the previous low, while the new upward wave has not yet exceeded the previous peg. Geopolitical developments have recently begun supporting bulls, as a memorandum of understanding between Iran and the United States could be signed in the near future, while the ceasefire remains in effect and may be extended indefinitely as negotiations on a final sentiment continue. On the 4-hour chart, the GBPUSD pair rebounded from the 23% Fibonacci retracement level at 33.27 and continued rising toward the resistance level at 1.3482, 35.14. A rebound from this zone would allow for expectations of a moderate decline. However, market movements this week will depend primarily on geopolitical developments, rather than the chart analysis. Technical analysis should therefore be viewed only as a supplementary tool. No emergent divergences are currently observed on any indicator.
That's all for today. See you online soon.